Today, you're gonna learn how to use one of the most famous trading indicators known as Bollinger Bands and how to not make common mistakes. Stay till the end of the video where you will see easy and profitable strategies that will help you beat the markets. Bollinger Bands is one of the most famous trading indicators, used by one of the most famous traders in the world. This technical indicator, developed by John Bollinger, is used to measure a market's volatility and identify overbought or oversold conditions. Bollinger Bands consist of a middle moving average with two outer averages. The moving average in the middle is 20 periods value. This indicator uses a simple moving average because the standard deviation formula also uses a simple moving average. When you look back to that period for the standard deviation is the same as for the simple moving average. The outer moving averages are usually set with a value of two standard deviations above and below the middle band. You have to look for a few stages of Bollinger Bands indicator so that you can use its full potential. When moving averages tighten during a period of low volatility, it raises the likelihood of a sharp price move in either direction. This may begin a momentum move. Be careful and look out for a false move in the opposite direction, which reverses before the proper trend begins. When the moving averages separate by an unusual large amount, volatility increases and any existing trend will try to reverse. Prices tend to bounce within the moving averages, touching one band then moving to the other band. You can see these swings to help identify potential profit targets. For example, if a price bounces off the lower band and then crosses above the moving average, the upper band then becomes the profit target. Price can exceed or hug a band envelope for some periods during strong trends. On divergence with a momentum oscillator, you may want to do additional research to determine if taking additional profits is appropriate for you. You can try stochastic indicator with a combination of Bollinger Bands, for example. A strong trend continuation can be expected when the price moves out of the moving averages. However, if prices move immediately back inside the moving average, then the suggested trend is most probably a false signal. So far, you have been learning about the foundation of Bollinger Bands, and now is the time to share with you a strategy known from the book Trading Systems by Jaekle and Emilio Tomasini. You can find a link to the book in the description below. In this book, they share a simple but very effective strategy. Buy when the price closes above the top Bollinger Band level and close when the price crosses the middle line of the indicator. This is a perfect example of a momentum strategy, in which eventually the price will come to normal levels when we are going to sell. When the price of our instrument crosses the top bar of our indicator, that gives us a signal that we have a huge amount of buyers at this time and our standard deviation is above our normal levels. Selling when our price crosses our middle moving average means that our standard deviation is back to our normal levels and we are going to wait for the momentum signals to give us an alert again. The default values of Bollinger Bands are set to the length of 60 and distance of 2 standard deviation points. By changing these parameters, you can adjust the trade frequency. The smaller you set the length of the moving average and the smaller you choose the distance of the Bollinger Bands, the faster we will react to market changes and the more signals you will get. As well, this possibility to adjust the system strategy to your personal needs, Bollinger Bands have further advantages for building mechanical trading systems. Due to their volatility-based component, they can easily adapt different market conditions. Additionally, they provide a natural exit point by using the moving average between the Bollinger Bands. Now, let's take a look at a few signals, one in stocks and one in forex markets. Let's start with the stock market. We're on a daily chart of Tesla and we can see that our system gives us a buy signal on the 30th of June. On this day, the price of Tesla's stock is reaching over the top moving average of our Bollinger Band indicator, which means that the stock is in a momentum state and there are more buyers than sellers. Our exit signal is on the 30th of October, where the price is reaching our middle moving average, which means that the price at that point is at its normal average state. For these 4 months, we have generated an 80% return on our investment with both following the trend and following the momentum of the stock. Our second market in which I want to show you a signal is the Forex market. We are on the 1-hour chart for Euro-USD pair, and you can see that on the 21st of July we have a buy signal because the price crosses our top moving average of Bollinger Band. Our sell signal is 7 days later on the 29th of July, where we can collect a sweet profit of 235 pips. By using this strategy, we are following the big institutions moving the price in our favor. Or in other words, we are using the momentum of a specific instrument and we are trying to collect as much as possible from this move. By showing you signals in different markets and timeframes, I want to show you that this system is not created only for a specific stock or a currency pair, but it's created to follow the market conditions and to adapt based on the market moves. Even the creators of this strategy made their backtests in 7 different markets to create the ultimate portfolio. Their backtest is from 1994 to 2005, and for this period, this system has a net profit of over $220,000, profitable trades of 42%, profit factor of 1.96, and 261 trades. You can see clearly that this strategy is successful on different timeframes and different markets. Yet, the authors of that strategy are saying that you can still optimize it, and they have some topics in their book on how to do that yourself. That's about it for today's video, guys. I hope you liked it. And if you want to see more videos like this, please like, comment, and subscribe. See you next time.